Rolls-Royce and Samsung are among the stocks in our squawk picks this morning. For more, let's bring in Sarah Ketterer, CEO and portfolio manager of Causeway Capital Management. Has about $43 billion American in assets under management. Not $43 billion.
It's now 45.
Well, you've been buying Rolls-Royce and these great stocks. So far this year, her Causeway International Value Fund is up more than 21%, outpacing the S&P 500, ranked third in the third percentile by Morningstar. I was going to say, okay, Samsung and Rolls-Royce, you're like scouring the entire globe, but it's an international fund, so I shouldn't be surprised.
We are. And as U.S. has been so much in favor, I mean, really, since the global financial crisis, rolling 3 years, U.S. market has crushed the non-U.S. markets. But there is so much opportunity outside the U.S. because no one's looking. And we are.
Hard work.
It is very hard work. We've got 29 fundamental analysts, another 10 quants, and the whole idea is to find companies that have had some sort of setback. Operationally, they've done something wrong. But that can be rectified, and that would reinstate earnings and cash flow growth. And then you get this big multiple re-rating upward.
You have to believe in the management, if that's the case. If they've done something wrong, was it a previous management, or is it just a management that's willing to learn from its own mistakes?
Well, typically, it's a new management. It's the new sheriff in town. And that's where governance is important, having a board, like the board of Rolls-Royce PLC, the UK aerospace company. The board chairwoman, she wanted a better CEO and got one. And that CEO is implementing a restructuring plan. There's not just the cyclical recovery of now engines, wide-body aircraft are in the sky, so flying hours are increasing. So that means cash flow. There's an individual at the helm of the business who's creating, insisting on better pricing in contracts and more cost-cutting. And that's why it's our largest holding, because there's more to go.
Didn't they make the cars, too?
Nope, don't make the cars.
They don't make the cars.
Only the engines.
The only reason I was going to say that was because Brady was squiring
I saw
her around in the new squeeze around
we read all the best things.
Yeah, we bring it all home, Sarah. But in this case, it doesn't work because it's just you're talking about the aircraft engines. Any of these Pratt & Whitney problems play into?
Those are very Raytheon Pratt & Whitney specific.
Does it play into?
But not necessarily. But one of the catalysts.
Advantage them?
The reason why we bought the stock initially, Rolls-Royce, was pre-pandemic because they had an aircraft engine problem. So that can be a reason if the market overreacts to buy into a stock like that, because you do expect them to repair and move on. But then, of course, the pandemic led to the grounding of most wide-body aircraft, and that was just a total disaster.
If on CNBC had been asking you in the last year, are we going to revisit the October lows, would you have cared about any of that, or what was going to happen? Or are you just totally focused on, to the extent that maybe the U.S. got ahead of itself, then you can look elsewhere internationally, maybe that, but you don't try to time markets at all, I guess, do you?
We don't try to time, but if the markets bring us an opportunity, our team is very interested in lows, because lows lead to new highs. So whenever there's a crisis or a sell-off, think of us as just waiting for that chance to buy the great company at a better price.
How do you know when to step in, though? Because sometimes it's catching a falling knife. Sometimes the new lows are topped or beaten with lower lows.
Nobody knows. It's an excellent question, Becky, but that's where sort of dollar cost averaging or continuing to buy and lower that entry price is helpful, because you don't know where the bottom is. But doing elaborate valuation work helps. It helps us understand just how irrational the market has become. If we think a stock, let's say Samsung, having sold off in the problem they had with excess inventory of memory chips, had gone too close to book value, and we think that's an irrational valuation, that's a time to start buying.
Give us some more. What else you got in there?
In consumer household and personal products, there's a stock in the UK called Reckitt Benckiser. Again, new CEO and great lineup of brands. And we have more consumer staples in our fund than we've had in years, in part due to this concern about market slippage responding to slowing economies. I don't know how we have this amount of monetary tightening and inverted yield curves and a particularly difficult tightening situation overseas, especially in Europe, where economies may slow quickly. There's a greater transmission mechanism when you have more of your economy associated with variable versus fixed rates, for example, in mortgages. And the UK could slow quite sharply. So all of that is out there looming, and that gives us a chance to position in some defensives, and ideally we'll use the proceeds from those as they outperform markets. They go down less to buy into more cyclical stocks when the opportunity presents itself.
So best areas of the world, if you're really, do you go everywhere? Like invest in India?
We go everywhere. We have more of a quantitative approach in India, in the emerging markets. I would have said several months ago, maybe the best place to go is China. I know I'm going to burst into flames now, but
right.
Just because the stocks have been so beaten up. My colleague Brian Cho heads up our technology portfolio management, really likes Tencent, and we've managed to accumulate some of that. It just, those valuations for what are world-class companies, because the China discount is so great, might be too much.